All right, it's Friday. In today's video, we're going to go over what we've learned this week. Basically, the stuff that I've been saying for a while. Number one, the central banks do not control interest rates. It's the markets. And we saw that with the Fed and the US 10-year Treasury, which we're going to review. And also, Walmart has proven a couple of things that we've been saying in the past here. Namely, that the consumer is tapped out. And when the consumer is tapped out financially, there's only so much price increases that can happen with tariffs and oil prices going up there. So there's only so much inflation that can really happen there. First things first, earlier this week, we had the Fed try to get involved in the Treasury market. They basically did a Treasury buyback. Now, Treasuries are the opposite of stocks when it comes to how they react to being purchased or sold. So when you buy Treasuries, it doesn't increase them. It actually decreases their price. So they tried to do it. They tried to get some yield control down here. They bought a bunch of Treasuries back to get the 10-year down. And in 24 hours, the markets shot them right back up because, as I've said many times, central banks cannot control interest rates. It's the markets that control interest rates. This time it was corrected in 24 hours. The markets corrected it within 24 hours. Sometimes it takes longer than that. This is a good indication, though, that the central banks, they can't control the interest rates. Interest rates are a reflection of the economy. They aren't the economy. So that was a lesson that we've learned this week, which is why I keep saying, yes, it's important to know what the Federal Reserve is doing and what the Bank of Canada is doing. But if you really want to know where interest rates are going, follow the financial markets. Let's take a look at Walmart. So Walmart's stock has dropped because of their earnings report. They missed their earnings. Now, this is important because, of course, lots of people shop at Walmart. And when they miss their earnings reports, that means people are buying less and less stuff, which is a big red flag because it means the consumer is now tapped out. But what's interesting is when you look at the headlines, it says a few things. Number one, plans to ease prices with tariff refund. So what does that mean? Number one, it means that Walmart itself was covering a lot of the increase in tariffs to not relay that over to the customer. They knew the customer couldn't afford the price increases, so they were actually eating those tariffs. And number two, they're actually going to use their tariff refund to further ease prices. So they're going to get that refund because these tariffs are not legal to lower their prices so they can get shoppers in so they can start raising their overall earnings and stock price again. So a couple of interesting things there. Number one, Walmart, run by smart people. They know their customers are tapped out. They cannot let those tariffs increase their prices too much, so they had to eat some of the cost, and now they're using those refunds to further lower the cost so people can shop. That's a pretty good indication of where the U.S. consumer is right now.